Hello and thanks for joining me. It is Monday, October the 24th, after regular trading hours, and what I thought I would do in this video is just talk a little bit about the price action this morning. I've been starting these recordings somewhere around 4:15, 4:30 a.m. Basically during the London trading session, and I have found that there's usually a setup that forms prior to the open for regular trading hours, and I've been kind of sticking with that here for the last 2 weeks or so. And in the prior video I showed you the 4 chart layout that I use, and what I did this morning was just record 2 charts, and you're looking at the ES December contract on the 65-minute time frame on top and on the 15-minute time frame on the bottom. And something interesting happened as far as a setup using longer term levels and using a shorter term time frame for the entry. So if you look above where price is currently trading, there's a fair value gap. Price is trading up into the gap, and I did take a short here. The idea being that this is more of a counter trend trade because I've had an overall bullish bias going into tech earnings this week. But I thought price might move down to the fair value gap that is below the swing low that's forming there. I put my stop just above the displacement candle, and I didn't want to take the additional heat of putting my stop above the candle prior to that, and I was stopped out of this trade for a loss. But as price began to look more bullish and trade in the direction of my bias, a fair value gap formed with the new 65-minute candle, and that's where I wanted to talk about the setup on the shorter term time frame. So at this point, price action is bullish. I update the charts here, and I begin to look for an entry, a pullback into the top of this gap where I can go long. Switching back to the 2 chart layout, you could call this a 3-bar play or a break in base, but I'll highlight the candle that I entered on as soon as the video plays out a little bit further. But that red candle on the 15-minute was basically all the pullback that this move was going to yield, and any kind of bounce off the top of a gap, I consider that bullish, and it did work out with the bullish move up. Looking for new highs to take out the Friday high, a target up above the top of the range. That pink line there at the top of the chart is the range, the top of the range that we've been trading in. So here's the entry on the 15-minute chart, and a nice push up in price. I apologize for the glitches in the screen. These charts are on my secondary screen, so when I'm working on my main screen, it affects the charts that are on the secondary screen. But a beautiful push up and a great trade. So now I'll get into the part where I made a mistake, and that is I did not maximize profits on this trade. And where it left me was just before the open. I didn't like the price action going into the open, and I didn't want to have a stop low enough to where I thought I could withstand the morning volatility. So I ended up exiting the trade just before the open for a mediocre win, when I could have maximized it by just taking profit into the push up. But again, I was looking for a continuation above the top of the range. So I'll just let the video play at normal speed here, and I'll cut to just prior to the open. I closed the trade 10 minutes before the 9:30 open. So I didn't like the look of that 65-minute candle, the shooting star down, and I thought with morning volatility, we might well go trade back into the gap, maybe to bounce up and go higher. But again, I didn't want to take the risk of putting my stop in a place where I thought I could withstand the morning volatility. So at this point, I just closed the trade for a very small win when, again, just prior to that, I should have sold into strength. So good practice working with price action on multiple time frames. Chose a good entry, switched my bias from a counter trend play into the direction of my original bias. So good experience overall. If making these videos does nothing else for me, it'll help me recognize habitual mistakes I'm making. And with the nature of the markets, taking profit quickly is the best strategy. And it turns out that high that formed when I took that trade was the high for the day. It wasn't taken out until the last 30 minutes of trading, and price only traded up to maybe 2 points above the range that I had in mind. That being said, thanks for your time and attention, and I do apologize again for some of the technical glitches. There was problems with the replay video, but I think there was enough there to get my point across. Good luck trading.